Hello everyone, I hope so you will be fine. So guys, today we are going to discuss the third topic, topic number 2.3. Please let me quickly remind you. So we have a three unit number one, unit number two, and unit number three. So these three units are called financial statement analysis, and it is 20% of your exam. So we are currently into unit two. In unit two, we have these three topics. So we have our topic number 2.1, which is profitability ratio, which we have already covered. Topic number 2.2 is also theoretical topic, and this topic is factors affecting reported profitability, like how profitability can be affected by different factors. So this topic we have already covered. So today we are discussing third topic, which is per share ratio. In per share ratio, we have a different ratios. So first we are going to focus today on earning per share. So let me move to the topic side. So here we go, guys. So first of all, the first ratio under per share ratio topic is earning per share. So earning per share ratio is really important ratio. Why it is important? Let me give you idea. For example, being a investor mean to say being a shareholder, especially common shareholder. Okay, so what we need information of earnings per share. So how earning per share is calculated, that we will see, but I'm just giving you rough idea. When we calculate earning per share ratio, simply what we do, we take profit available for common shareholders or profit available for ordinary shareholders. So that profit we always divide with the number of outstanding shares, weighted average number of outstanding shares. So once we divide profits with the number of shares, so we get earning per share. So for example, earning per share is $2. So this ratio is very important for investor, because being a shareholder, so I can realize that if a company is earning $2 per share, so how much dividend maximum they can pay. So for example, if company policy is to pay 40% dividend, it means being an investor, so I can expect 40% of $2, whatever the answer would be. So that amount I can expect as a dividend from the shareholder. And please also note, when we calculate earning per share, so earning per share is always calculated for common shareholders. Common shareholders are also known as ordinary shareholders, because ordinary shareholders or common shareholders are the residual owners of the corporation. Okay, and that is why whenever we calculate EPS, so EPS is mainly for home for the common shareholders. So that is the reason. So we remove the preferred dividend which we pay to the preferred shareholders from the EPS calculation. Understood? Now please guys, remember here we'll see the calculation, but please remember here I'm just going to explain here two things first. So usually company may have one of these two types of capital structure. Okay, so I'm talking about capital structure. So sometimes some companies they have simple capital structure. I'll explain what is the simple capital structure. Please make sure if a company has simple capital structure, only basic earning per share is required. Only one basic EPS calculation is required. But if a company is having a complex capital structure, then being a company, we have to report two types of EPS. We have to report basic EPS, and we also need to report diluted EPS. Understood? So again, I'm telling you, if we have a simple capital structure, okay, so then we need only basic EPS calculation. But if we have a complex capital structure, we need basic EPS plus we need calculation of diluted EPS. So now please let's understand now what is the simple capital structure, and then we'll see what is the complex capital structure. So here we go. So guys, usually Usually we say a company has simple capital structure if following two conditions apply. Like simply if these two conditions are met, so then we say that this company is having a simple capital structure. First condition is that the firm has only common stock in his capital structure. Like we don't have preferred stock. Okay. So if you have a only common stock, this is the first condition. Then we have to check another condition. Another condition is that the firm has no dilutive potential common stock. So the keyword here, potential common stock. So actually, guys, please remember what is potential common stock. So potential common stocks is a security. It could be a security or any other contract. So I'll explain. Don't worry with the example. It could be a security or it could be any other contract that may entitle the holders to obtain common stock. Let me give you example. For example, we may have, let's assume, convertible bonds. So convertible bond is itself a security, right? It's a like we issue to the public when the company want to raise loan from the public, right? So these certificates are issued to the public. So these are bonds. So if you have a convertible bonds, so it means convertible bonds are those bonds which will be converted into common stock in future. So that is why it's called potential common stock, right? Convertible bonds are potential common stock, right? Or you may have a convertible preferred stock. So those preferred stocks which may convert into common stock in future, right? So that is also called potential common stock. So you may have an option, you may have a warrant. So there are different kind of things are there, guys. So which are called potential common stock. So please remember, if a company has only common stock in its capital structure, we don't have preferred shareholders or preferred stock, plus we don't have any potential common stock. We don't have, if these two conditions are met, so then we say that this company is having a simple capital structure. If a company is having a simple capital structure, so then only basic EPS is required. Okay, so then please remember here, if a company is having a complex capital structure. So what is complex capital structure? For example, maybe we have a potential common stock in our capital structure. Potential common stock, these are the examples I already told you: stock options, stock warrant, convertible bonds, convertible preferred stocks. If you have any one of these security, or if you have a preferred shareholders in your capital structure, so then we call it what? We call it, it is a complex capital structure. In case of complex capital structure, so please remember, we need two EPS. We need basic EPS calculation also, plus we need diluted EPS. Okay, guys. So this is what is the basic thing. Now let me explain. So what are the stock options? What is a stock warrant? Then what is the convertible bonds, convertible preferred stock? If you will face any of these things in the capital structure, it means we call it companies having a complex capital structure. In that scenario, two EPS are required, basic and diluted. So guys, here we go. What is stock option now? This I'm going to explain. So please, this is the basic definition. Stock option is the benefit in the form of an option. Actually, it is the right, which is given by the company to an employees, or it may be given to the investors also. Okay, in this right. So the employee or the investors, they may have a option. They may have a choice to purchase, to buy shares in the company at a discount or at a stated fixed price. Okay, so this is what is called stock option. Mostly practically stock options are given to the employees. Okay, so it means if you have an option, for example, I'm giving you option that you can buy a stock, for example, 100 shares you can buy, okay, at maybe, for example, $5, right? So this option is with you. Now it is your choice if you want to buy those stock at $5 within specific date. So that is called stock option, right? Now we have a stock warrant. So usually warrants are attached with the, usually with the bonds. Okay, so please remember here, so what is the warrant? It is kind of option, but see the definition. Stock warrant represents the right to purchase. It means it's an option to purchase a company's stock at a specific price and at a specific date. Okay, so this is what is a warrant. Usually warrants are issued to the investors. As I told you, sometimes we issued the bond with the warrant, right? It means it's a similar like a stock option. So usually stock options are given to the employees and warrants are given to the investors. Okay, so please, one more thing. We have a note now, as I told you already, that if you have a simple capital structure, okay, then only basic EPS is required. But if you have a stock options or stock warrant or convertible bonds or convertible preferred stock, or maybe more than one out of these four, so then it means you have a complex capital structure, then two EPSs are required, basic and diluted EPS. Convertible bonds, I already told you. So bonds, these bonds may convert into common stock. Okay, so this is called convertible bonds in the future. So this again, we give this convertible bonds are this choice to the holder. Again, similar way, we may have a convertible preferred stock. These are those preferred stock which may convert into common stock in the future. Now, guys, here we go. First, now we are moving to the calculation side, like when basic EPS is required. Yes, we know if a company is having a simple capital structure, again, basic EPS is required. Even you have a complex capital structure, then with the basic EPS, we need to show the calculation of diluted EPS also. So basic EPS first, I'm going to show you. Then at the end, I'll show you how to calculate the diluted EPS with the slight difference. Okay. So here we go. So when we calculate basic EPS, this is the formula for basic EPS. Okay, so we need net income available to common shareholders. So we need actually the profit, that profit which is available to the common shareholder. So that is why preferred dividend is always removed. Okay, so please remember net income available to common shareholders, how it is calculated. Net income available to common shareholders. This is the formula. So we always take net income. From there, we deduct preferred dividend. Okay. So this is called income available to common shareholders. Okay. So what we need, net income. Net income we will take from the income statement, and preferred dividend we will deduct here whatever the preferred dividend we are paying. And here I'll tell you note. So we have a note attached with the preferred dividend that I'll explain. Okay. And then this net income minus preferred dividend, which is known as net income available to common shareholders, we always divide with the weighted average common shares outstanding. So guys, please make sure we need to know how to calculate the numerator and then denominator. So let's start now. Net income straight away you can take from the income statement. Now the main thing, main note from the numerator, which is attached with the preferred dividend. So I'm going to explain here. Please need concentration. So guys, actually usually we have two types of preferred stocks. In terms of preferred dividend, I'm explaining. One is called cumulative preferred stock, and second is called what? Non-cumulative preferred stock. I hope so you have the idea. If you don't have idea, I'll explain quickly. So please guys, cumulative preferred stock, it is like that. Please understand. For example, if as a company we issued a cumulative preferred stock, and for example, per year dividend is 10,000. I'm assuming per year preferred dividend is 10,000. For example, if I'm not able to pay dividend in year one, for example, I didn't pay the dividend in year two, when I will pay the year two dividend, at that time I'll pay year one dividend also, year two dividend also. This is called what? Cumulative. Cumulative means that this dividend will accumulate if in case if it is not paid. Okay, it will accumulate like interest. Then we have a non-cumulative. So non-cumulative, for example, if I have a dividend of 10,000, let's do non-cumulative. Okay. And in the year one, I didn't pay the dividend due to any reason. Maybe I'm in the loss, whatever. So whenever in year two, I'll pay, for example, if in year two, if I'll pay the dividend, I'll pay only year two dividend. I don't need to pay year one. This is what is called non-cumulative dividend. Okay. Non-cumulative preferred stock. But here point, what is the point relevant to EPS? Please remember, guys, if preferred stocks are cumulative, so we have to deduct here. We have to deduct here preferred dividend. Okay, we have to deduct here preferred dividend in the numerator. We have to deduct in the numerator, even it is declared or not declared by the board of directors. What I'm saying, we have to deduct even it is declared or not declared. Okay, we have to deduct. Okay, but make sure when we deduct, we have to take only current year dividend. Don't take previous year, because this EPS we calculate every year. So in every year, what we will do, if preferred stocks are cumulative, so we will deduct the current year dividend. Okay, only current year dividend, even it is declared by the board of directors, or even if it is not declared by the board of directors. But if this preferred stock is non-cumulative, please remember we will deduct from the numerator here. We will deduct here from the numerator as a preferred dividend if it is declared. If it is declared. If it is not declared, then please don't deduct. Then don't deduct. Okay, then don't deduct. If it is declared, then you will deduct only. But again, the rule is whenever you deduct only, you will take current year values. Understood, guys? So here we go. This is what is a note. I'll show you example also. Don't worry. Now, I'm just explaining first numerator, okay? And I'll show you, and then I'll explain the denominator, okay? Denominator, weighted average number of shares. So we have here example just for the numerator here. This example is for just numerator adjustment. So here we go. For example, they're saying an entity has two class of preferred stock, two classes. It declared a 4% dividend on its $100,000 of non-cumulative preferred stock. So please remember, so 4%, this is actually the total par value of non-cumulative preferred stock. If I take 4% of this value, so this will give you amount of dividend, which is going to be 4,000. And please make sure this is a non-cumulative. So this 4,000 dividend we will deduct from numerator if it is declared. Yes, it is declared. It means this 4,000 we will deduct from numerator. Understood? 4,000. Now we have here another thing. The entity did not declare a dividend on its $200,000 of 6%. This 6% again is a percentage of dividend. This is the total par value. Cumulative preferred stock. Okay, so it is a cumulative preferred stock. So this is the par value of cumulative preferred stock, 200,000. If I take 6% of that, it will be 12,000, right? This is the dividend. So this dividend we will deduct. We have to deduct even it is declared or not declared, because these are cumulative preferred stock. So see, they are saying that they did not declare. They did not declare. It means 12,000 amount of dividend related to cumulative preferred stock we will deduct from the numerator. Okay. Now let's read the next line. What they are saying. Next line is they are telling you here undistributed dividend for the past 4 years have accumulated on this stock. They're saying maybe in the past 4 years this dividend is not yet paid, so it is accumulated. Okay, below is an expert from the entity's condensed income statement for the year. Okay, so please remember, so again, as I told you, this 4,000 we will deduct related to non-cumulative preferred stock because it is declared, and we will deduct if it is declared. So, and this is declared, so we'll deduct. But this amount, even on cumulative, even it is declared or not declared, you have to deduct 12,000. Okay, it means total amount of dividend 16,000 you will deduct. Now here guys, here we go. We have your income statement. They're saying income from continuing operations before income tax. I hope so you have the idea of income statement. This is a straight away income statement. So this is the profit before tax from continuing operation. Then we have a minus income tax expense. So then we have a equals income from continuing operation. Then we have a discontinued operation value. Okay, discontinued operation. And they're saying we have a loss from operations of a component unit. Maybe we sold some pipeline division and we got this loss on that. Okay, this loss, final value of discontinued operation. This, okay, this value, this is the final value. Okay, and here because this is a loss, it is written negative always. So we will take here income tax benefit, because on loss we will have a tax saving. So whatever let's assume rate of tax is there, so we'll multiply with the rate of tax. So you will get this tax saving, and the net amount, this loss is negative Tax saving is positive. So this is the net amount, 130,000. This is called loss on discontinued operation. Now what we will do? Income from continuing operation, which is 1 million, plus minus loss on discontinued, because this is the loss. So we will minus 1 million minus 130,000. This is equals net income. Actually, it's an income statement. And I believe you have a strong idea of income statement. Okay. If you don't have idea, you can search topic of income statement and statement of comprehensive income from my YouTube channel and you can watch from there. Okay, guys. So then now here, please remember, this is what is your income statement available. Okay, now please, here we have to adjust now numerator. Numerator, we are going to adjust for EPS calculations. And when we calculate EPS, and if you have a continuing operation and discontinued operation also, then this is how you will prepare your numerator. So need concentration. Numerator, this is how it is prepared. So what we will do, so see how these values are taken. So this column is for income from continuing operation, this figure. And this column is for net income. This is the net income. Okay. So first we are writing income statement amounts. Income statement amounts. Yes. Income from continued operation, we have a 1 million, we will write it here. And net income, we have a 870,000, we will write it here. Then what? So we will deduct a dividend. I already told you non-cumulative dividend. Dividend or non-cumulative preferred stock, right? It was 4,000 because it is declared. So we'll deduct from continuing operation column also, from net income column also. Okay, so this is, guys, very important, because whenever you have a continued and discontinued operation, so you need to adjust numerator for continuing operation and net income. If you don't have discontinued operation, then only this column is required, net income column. Okay, but if you have discontinued operation, then you have to show separate information of EPS for continuing operation and net income. Okay, so then what? So we wrote these two values. Simply these two values we wrote from the income statement. Now we have already deducted dividend on non-cumulative preferred stock, which because it is declared 4,000 from both column we will deduct, and then we will deduct a dividend accumulation on cumulative preferred stock. Even the dividend for cumulative preferred stock, look at here. It was cumulated for last 4 years, but we have to deduct only current year, and current year dividend, I told you, it is these are the cumulative preferred stock, right? 200,000 times 6%, so it is 12,000. So this 12,000 we will also deduct. So this 12,000 we will deduct from continuing operations also and net income also, and this is what is the income available to common shareholders, 984,000 from continuing operation and 854,000 for net income. So these are the two numerator, and we will show these two calculations. Okay, because whenever we have discontinued operation in our income statement, so we have to show these two columns. If you don't have discontinued operation, only then net income column is required. Okay, guys. Now, guys, I'm going to explain the denominator. So see, as I told you in the formula, so numerator I have already explained. So what are the adjustment in the numerator? And now I'm going to show the adjustment in the denominator, which is how to calculate weighted average common shares outstanding. Common shares are also called ordinary shares in British language. Okay. So we are going to calculate weighted average shares. So I'm going to show you calculation for weighted average shares. So here we go. Guys, for weighted average shares, so first I'm assuming here we do not have any stock split and stock dividend. Okay, so we have only simple transactions. For example, we have a beginning shares. This is the data which will be given in the question. I'm telling you this data. This is how it will be given in the question, this data. For EPS calculation, this data will be given, which is highlighted. So rest you have to do the calculation. For example, this is the data to calculate weighted average common shares outstanding. Okay. So for example, it told you on January 1, we have a beginning balance of shares, how much? 240,000 shares. Then on March 1, we issued 60,000 shares. Then on August 1, we repurchased 20,000 shares, because repurchased shares are also called treasury stock. Okay. So on November 1, we issued again 80,000 shares. And I'm assuming our year end is 31st December. Okay, this data is available. Now, how you will calculate weighted average number of shares? And please make sure in this question, I'm assuming we don't have a stock split, we don't have a stock dividend. And next example I'll do with the stock split and stock dividend also. So here we go, how you will calculate weighted average number of shares. So there are several methods are there, guys, to calculate weighted average number of shares. So, but I'll follow this method. It's a very simple. So please, I'm writing here three words. Three words I'm writing: issue date, repurchased date, and year end. Don't forget these three words: issue date, repurchase date, year end. Okay, why I'm saying this, I'll show you. So whenever we calculate weighted average number of shares, so we'll make this column. First column is for date. Second column is for the name of transaction. Third column is common shares outstanding. Fourth column is portion of the year, like how many number of months those shares were outstanding before the next transaction occurrence. So then we have a last column is weighted average number of shares. So now see how it will work. So first of all, on January 1, first we'll write all these transactions. As I told you, this data will be given. This same as it we will write. Same as it we will write that we have a beginning balance 240. Then on March 1 we issued 60,000 shares. Then August 1 we repurchased 20,000 shares, and then November 1 80,000 shares were issued. And once we wrote these things, now we'll complete the format. How you will complete this format? So this is how you will complete now. I'm showing you. First of all, I'll take the first transaction, January 1. So we have a beginning balance. 240,000 shares are there in beginning balance. Okay, we wrote it. Now here, please remember how you will calculate this portion of year, the number of shares were outstanding. This portion, how it is calculated. 12 mean to say 12 months, total months in a year. So how this 2 is calculated. So when you take how this 2 is calculated, please remember from this transaction which you are solving now, from this transaction, you will see the next transaction. And next transaction, if it is issue or repurchased or year end, whatever transaction will come first, you will count the number of months up to that point. Which point? From current transaction till next transaction. Next transaction could be issuance of shares, repurchased of shares, or maybe it could be a year end also. Whichever comes first, you will count the number of months up to that date. So see here. So from January 1 till March 1. On March 1, we have issued. Okay, this word is there issued. It means from January 1 till March 1, we will count the months. So these are 2 months because January complete and February complete. Okay, so these are 2 months. So now we will here multiply 2 over 12. 2 over 12 we will multiply. Okay, because these are 2 months. Okay, 2 months. So 2 by 12. So now 240,000 into 2 by 12. So it is 40,000 weighted average shares. Now we will solve similar way next transaction. So we have a next transaction now. March 1, this I'm solving now. So we issued 60,000 shares. So previously shares were 240. Now we'll add 60,000 shares into that. So outstanding shares will become 300,000. Okay, 300,000. Now again, how you calculated this 5 over 12? How this 5 is calculated? Again, from this transaction which I'm solving, from this date till next transaction I'll see. So next transaction, either it should be issued or repurchased or year end, whichever comes first. So let's see, from on August 1 next transaction, we have a repurchased. Okay, this word is there. So from this transaction from March 1 till August 1, how many months are there? These are 5 months. Count. March complete, April complete, May complete, June complete, and July complete. So these are 5 months. So now I'll take it 5 over 12. Okay, now 300,000 multiplied by 5 over 12. So this is the weighted average number of shares, 125,000. Similar way, I'll solve the next transaction now. I need concentration, please. So next transaction is on August 1. We have a repurchase 20,000 shares. So what we will do first, we will adjust outstanding shares. So previous shares were 300,000. Now I'll minus this 20,000. Why? Because these are repurchased. Okay, bought back by the company. So this 20,000 I'll deduct now. So 300,000 minus 20, so equals 280,000 shares. Now the point is that how I calculate this 3 by 12. So now from this date, I'll check again till next transaction. Next transaction should be either issue, repurchase, or year end. So see, it is issued. Okay, so from this August 1 till November 1, how many months are there? 3. August, September, and October, 3 months, right? So 3 by 12. Now 280,000 into 3 by 12. So 70,000 are weighted average number of shares. Now the similar way, I'll solve the next transaction now. So we'll take here November 1, we have issued 80,000 shares. Okay, so previous shares were 280 plus we issued 80 more. 280 plus 80,000, so it is 360,000. Now how I calculate this 2 by 12? So please remember from this date till next issue, repurchase or year end. Yes, we have after that we have a year end. Year end is 31st December. So November 1 till 31st December, these are 2 months. So we'll take 2 by 12. 360 into 2 by 12. So weighted average shares are 60,000. Now guys, what we will do. So once this is solved, now please, I need concentration here. So now we will add all these shares. So this is called weighted average number of shares, which is 295,000. And now I'll go back. What is the formula? What was the formula for EPS? For EPS calculation, the formula was what? Income available to common shareholders. Income available to common shareholders divided by weighted average number of common shares, right? Number of shares. Weighted average. So please, we have a two figures now. And these two figures you have to show. Please remember, guys, what we will do. So this income available to common shareholders you already have here. You already have. So now simply we will divide this with the number of shares outstanding, weighted average number of shares outstanding. And whenever you have a continued and discontinued operation, so we need these two figures. We need income available to common shareholders from continuing operation, which is 980,000. This we will divide with the weighted average number of shares, which is 295,000. Same way, we'll take net income, which is available to common shareholders. Okay, so which is 850,000. We will divide with the 295,000. So we will get the EPS calculation. So once we'll divide 984 divided by 295. So our EPS will be how much? 3.336. And once you will take second figure, 854,000 divided by 295,000. So we'll get EPS figure how much? 2.895. So 2.895. Okay, now see guys here. Actually, this is the EPS from continuing operation, and this we can expect in the future also. But this EPS here, it is decreased. Why? Because we have a discontinued operation in income statement. We have discontinued operation, and in discontinued operation we have a loss. I'll show you. We have a loss, adjusted loss here. See, discontinued operation, loss on discontinued operation 130,000. So if I take 130,000 divided by number of shares 295,000. So due to this loss, your EPS is decreased. And your EPS is decreased by how much? 0.44 dollars. And if you will take the difference of these two EPS of from continuing operation and and net income, so the difference will be similar. This difference, and why this difference? Because it is due to the loss on discontinued operation. Okay, so now question: why we need these two figures if you have a continuing operation and net income? Simply, if you have a discontinued operation, so you need to calculate income available to common shareholders from continuing operation and discontinued operation. The reason, because these figures can be expected in the next year by the investor because these business is continued. Okay, but this figure maybe is not realistic because in future maybe this discontinued operation won't be there, right or wrong, because it is already adjusted here. So that is why we need to show to the investors, because this figure from continuing operations, it will be continued in the future also. This we can expect, but this we are showing because this EPS is less due to the involvement of discontinued operation, and maybe in the future this discontinued operation won't be there. Okay, now guys, numerator adjustment are all adjustment I told you. Now I'm going to show denominator adjustments. Okay, in denominator I already told you previously. I did this example, and in this example I have assumed we don't have stock dividend, and we don't have a stock split. No stock split. What is stock dividend, stock split? We have already covered in part 1. So here I'm just doing the adjustment or relevant thing. Okay, otherwise you can refer to the video. So here we go. Now this is how question will be given. For example, this is how data will be given in the question. It may be written in the statement form. This is the data now in front of us. This is the question. Data to calculate weighted average number of shares outstanding. Okay. including stock split and stock dividend. Okay, so for example, this data is there now. For example, he told you we have on January 1 we have a beginning balance of 240,000 shares. On March 1 we issued 60,000 shares. On June 1 we distributed a 50% stock dividend. Okay, we gave 50% stock dividend to existing shareholders. On August 1 we repurchased 20,000 shares. On October 1, again we distributed 2-for-1 stock split. Okay. And then on November 1, we issued 80,000. Please remember, stock dividend will be applied to existing shareholders. So existing shareholders, because stock dividend happened on June 1. So these are existing shareholders on January 1 and March 1. Jan 1 and March 1, these are existing shareholders. So these two transactions we need to adjust for stock dividend. But stock split, again, stock split happened on October 1. Stock split will be applied on all again to the existing shareholders. Okay, so that I'll show you. And we always assume whenever we issue stock dividend or stock split, so we always assume as these transactions happened at the beginning of the year, or these shares were outstanding forever. Okay, this is what is the assumption we do. Based on this assumption we do the calculation. So here we go. Now this is the question. Now what we do, so whenever we have a stock dividend stock split, so please remember, now we'll make format like that. We'll write column of date, name of transaction, shares outstanding. If you have a stock dividend, so we'll write it a restate factor for stock dividend. If you have a stock split also, we'll also make one column restate factor for stock split. Okay, and then portion of the year and weighted average. Previously these two columns were not there because these two transactions were not there. Okay, but now stock dividend is also there, stock split is also there. If stock split is not there, then stock dividend is there, then you will add only this column. Okay, you have to adjust according to that. Now please, now how you will solve it. So please remember how this portion or fraction is written here. Please, stock dividend is written here, stock restate factor for stock dividend 1.5, because stock dividend is 50% of stock dividend. If stock dividend is 50%, we'll write 1.5. 0.5 represent 50%. If stock dividend is 20%, we'll write 1.2. 0.2 represent 20%. If stock dividend is 10%, we'll write 1.1. If stock dividend is 30%, we'll write 1.3. Understood? That's why it's written 1.5. 1.5. Okay. Then when we write restate factor for stock split, how it's right? It's written we distributed 2-for-1 stock split. 2-for-1 mean to say if you have a one old stock, you get two new stock. You got two new stock. Okay. Or one and simply, sorry. So you can simply say this way, one stock is split into two. This is the correct interpretation. So one stock is split into two. Okay, one is split into two. For example, if you have a one existing shares, now it will become two shares because 2-for-1 is there. Okay. So now guys, please, how it is written? Because it is 2-for-1. So 2-for-1, 2-for-1. So 2. So this will be the restate factor for stock split. If for example, it is 3-for-1, so then 3 will be restate factor. Okay. And please remember, stock dividend and stock split will be applied to all existing shareholders. So here we go now how you will complete this format, because there are several ways to prepare this format, guys. So I'm using the way whichever is available on the screen now, because I feel this is the easiest. So here we go. For example, we'll write here, because this is the question I already told you. This data will be given in the question. And next you have to add this factor, portion of year, weighted average number of shares. Okay. So now please, here we go. This is how it will be done. So first of all, we have here January 1, we have a beginning balance of 240,000 shares. Now please remember, because on this transaction, stock dividend will also be applied, because stock dividend happened in June 1. It will be applied to existing shareholders. And stock split will also be applied, because stock split happened on October 1. So it will be applied to existing shareholders. So that is why, so this 240,000 we will multiply with 1.5, which is stock dividend fraction, 2, which is for stock split factor, stock split factor, and then multiply portion of year. How portion of year is calculated? Again, when you calculate portion of year, from the current transaction, you will again see these three words only. Three words only: issue date, repurchase date, or year end, whichever comes first. So here we'll see from this date the next transaction. Next transaction what issued. Yes. So it's the issue word is there. So we'll count the months. So these are 2 months, January and February. So 2 by 12. Now what? 240,000 multiplied by 1.5 multiplied by 2 multiplied by 2 by 12. So you will get weighted average number of shares 120,000. Then next transaction we will solve. Next transaction is what? On March 1, we issued 60,000 shares. So first we'll adjust outstanding shares. 240 plus 60 equals 300,000. Now again, stock dividend will be applied. Reason because stock dividend is after this transaction, right? And stock split will also apply because stock split is also after this transaction. Then portion of year. Again, how you got this 5/12? Again, you have to see issue date, repurchase date, or year end date. Okay, don't take split date or don't take stock dividend date. Only issue, repurchase, and year end. So see here how it works now. From March 1 till next transaction. Next transaction is stock dividend. Ignore this date because we have to take issue, repurchase, or year end. So I'll move to the next transaction now. What is next transaction after this June 1? After June 1, we have August 1 repurchase. Yes, this word is there. It means from this transaction till this time, we will count portion of year. So these are going to be 5 months: March, April, May, June, July. So we'll take 5/12. Okay, now see 300,000 times 1.5 times 2 times 5/12. So weighted average number of shares 375,000. And now I'll adjust the next thing. Next thing is what? After that, we have June 1. We distributed 50% stock, 50% of previous shares. So previous shares are how much? 300,000. If you will take 50% of this, it will be 150,000, right? So 300,000 plus 150 because we issued this 150,000, 50% as a dividend. So it will become now 450,000 shares. And see in front of that, you will not do anything. Don't multiply with the restate factor of dividend because this dividend is already adjusted in the existing shares here to the existing share. And then don't multiply with the stock split. Okay. And then don't multiply with the portion of year. Just leave it. Just adjust your outstanding shares. Okay. Outstanding shares will become now 450,000 and we'll move to the next transaction. Next transaction is what? August 1. We repurchased 20,000 shares. Okay. So previous shares were 450 minus 20 because we repurchased. Remaining is 430. And please remember now here, stock dividend factor won't apply. The reason stock dividend happened already, right? And these stocks are repurchased later. Only stock split factor will apply because stock split factor stocks is being split after this repurchase. So this factor will be applied too. And then how you got this 3/12 portion of year? How you got? Again from this transaction till next issue, repurchase, or year end. Okay, from this, if I'll check the next transaction, it's a stock split. Ignore this date. Move to the next date. Next is issue date. Yes, issue is there. So now from August 1 till November 1. So these are how many months? 3 months. So August, October, and November. Oh, sorry. August, September, and October. 3 months. So these 3/12. Now what? 430,000 multiplied by 2 multiplied by 3/12. So weighted average shares are 215,000. Then we have a next transaction. Next transaction is what? On November 1, we issued. Oh, sorry. Next transaction is October 1. October 1, we distributed 2 for 1 stock split. How you got this 460,000? So we'll take old shares, 430,000, multiply by 2. Multiply by 2. Simply 430 multiply by 2 by 1. Because 2 for 1 is there, right? If it is 3 per 1, so we'll multiply 3 by 1. If it is 4 per 1, 4 by 1. Okay. So 430,000 multiply 2 by 1. So this is 860,000. And you can see here, don't multiply with stock dividend, stock split, or portion of year. No, just leave this space. Only adjust the outstanding shares. Because these shares, stock split is applied to all existing shareholders. Then we have a next transaction. Next transaction is November 1. We issued 80,000 shares. So see, 860,000 plus 80, total is 940. Stock dividend is not applied because it already happened. Stock split will also not apply because it is already happened. Only portion of year will take. And from November 1 till next, we don't have any issue. We don't have repurchase, just we have a year end. And year end is 31st December. So November 1 till 31st December, these are 2 months, November and December. So 940,000 into 2 by 12, it is 156,667. So if I'll add all these shares weighted average, this will become weighted average number of common shares outstanding. And again, you can calculate EPS. So now stocks are 866,667. Now what, guys? We'll go back and again we'll take this profit. Just because now if I want to revise the EPS calculation, so we'll divide here with the new number of shares, right? So we'll take income available to common shareholder from continuing operation, which is 984,000 divided by 866,667. Okay, so you will get EPS. And here also income available to common shareholders, net income, it is 854,000 divided by 866,667. These are outstanding, and you will get these two EPS. EPS calculation directly I'll show you. So first EPS will be 1.131. Second EPS will be 0.981. Okay, so this is how you will calculate. Now, guys, let me perform a couple of questions with you regarding basic EPS, and then I'll show you what will be the changes in diluted EPS. Okay. So here we go. We have a question number 1 on your screen now. So we have a U company had the following capital structure during year 1 and year 2. Okay. So they're saying we have a preferred stock, $10 is the par value, 4%. These are cumulative. Okay. Cumulative. 25,000 shares are there. These shares are issued and outstanding, and total par value, which is 25,000 into 10, is 250,000. Then we have a common shares, common stock. $5 is the par value. 200,000 are the number of shares issued and outstanding. And total value is 1 million. How you got 200,000 into 5? So 1 million. Then we have a data here. First, guys, without any doubt, first we need to know what is the preferred dividend. Then I'll read the next question. Preferred dividend is what he told you, 4% of par value. So 4% of par value. So if you will take it, is going to be 10,000. So because this is a cumulative preferred stock, so it means we have to deduct, even it is declared or not declared, but you have to deduct only current year. Current year dividend is how much? 10,000 only. Only 10,000 you have to deduct. Okay. Then they're saying now if they're saying the preferred stock is not convertible. Okay, so you reported net income 500,000 is the net income for the year ended December 31st, year 2. This is for year 2 net income. You paid no preferred dividend during year 1 and paid 16,000 in preferred dividend in year 2. They are saying that in year 1 no dividend is paid, but in year 2 16,000 is paid. Please remember, even 16 is paid, but we will deduct only 10,000 because we have to deduct only current year dividend. It is cumulative, even if it is declared or not declared, so you have to deduct dividend, but current year only. Okay, then what? They're saying in its December 31st, year 2 income statement, what amount should you report as basic EPS? So you have to, what amount of basic EPS? So we'll apply the formula. So basic EPS formula is, we'll take EPS formula, I'm writing. EPS equals net income minus preferred dividend divided by number of weighted average number of common shares outstanding. So net income is given here 500,000. Great, we'll take. Minus preferred dividend, we have already calculated 10,000. It means numerator is 490,000. Now we have to work with the denominator. So for the denominator, we don't have any calculation, because only he told you common stock here, this figure only given. We don't have issued during the year. We don't have repurchased. We don't have a stock split. We don't have a stock dividend. Okay, so only they told you 200,000 shares are there. These shares are outstanding. So we'll assume, so these are the shares 200,000. Okay, outstanding weighted average. You don't need to perform any transaction here because no data is given regarding issuance, repurchased, etc. Straight away divide the 200,000 shares. If you will divide, you will get 2.45 as a basic EPS, $2.4. So now what would be the answer? So answer will be A. Okay, guys. So now I'm going to show you another question. So here we go. Question is on your screen. Please go through this question. So let's read first requirement. They're saying the basic earning per share rounded to the nearest cent of common stock for the fiscal year ended November 30 year 2. So actually you have to calculate basic EPS for this year end, 30 November year 2. Now let's read the question. They're saying a corporation had 40,000 shares of common stock outstanding on November 30 year 1. Actually this is the beginning shares, because we have to calculate EPS for year 2. So this is at the beginning of year, 40,000 shares were there. On May 20, year 2, okay, in May 20, it means in the second year, a 10% stock dividend was declared. 10% stock dividend. So 10% stock dividend. So I'll take 10% of this. So 4,000 shares are issued as a stock dividend and distributed on June 1, year 2. June 1, year 2. Options were issued to its existing stockholders, giving them the immediate right to acquire one additional shares of stock for each shares of stock held. There was an option, so they can buy one new shares against each existing share. So then they're saying the option price of the additional share was $6. So at this price, they can buy the additional shares. No options have been exercised as of year end. So this is not relevant data because no option is exercised. Okay. Then what they're saying, the average price of common stock for year 2 was $20. This is the price of common shares, which is irrelevant. The price of stock as of November 30 year 2 and the end of fiscal year was 30 per share, again irrelevant. And the corporation's net income, this is relevant for EPS. Net income is 229680. The corporation had no outstanding debt during year, and tax rate is 30%, which is also almost irrelevant because the net income is given straight away. Basic earning per share you have to calculate. How you will calculate basic EPS, guys? You don't have any preferred stock here, right? So simply basic EPS, how you will calculate, you need net income minus preferred dividend, which is not given, divided by number of shares outstanding, weighted average. So net income is given. So net income is how much? 229,680. Preferred dividend is 0. Okay. And number of shares outstanding, weighted average, that we have to calculate. How you will calculate? We have only two transactions relevant. We have a beginning shares and we have a stocks dividend, which happened in year 2, 10%. So how we'll do it now? So simply we can prepare the calculation. We'll write it a date. We have a transaction. We have a shares outstanding. Then we have fourth column, I told you, because stock dividend is there. So stock dividend factor we have to write, which is 10%, which will become 1.10. Okay, 1.10. So I'm writing here in front of transaction, I'll write 1.10. Okay, because it was 10%. Then portion of year and weighted average number of shares. So date on November, it's given November 30 year 1. November 30 year 1. So this is year 1. This is beginning. 40,000 shares were there. Transaction was beginning shares. 40,000 I'll write. And then on May 20, year 2. So during the year. So we issue 10% stock dividend. So 10% stock dividend. So just write it. So this is data is given. Now we'll solve it, guys. This is the data. So what first we'll do on November 1, year 1, we have a beginning shares 40,000 stock because dividend happened on May 20 year two. So this 10% will be applied to existing. So we will take 1.10. Portion of year, how much? From this date, which is beginning of year. Because this date we cannot take, it's not a repurchase, not a issuance date, not a year end. So just straight away we'll go to year end. Until year end, this will become 12 because year end is 3rd November 30 year 2. So from this to this date, 12 months are there. So we'll take into 12 by 12. So this will become how much? 44,000. Then we have on May 20 year 2, we have a 10% stock dividend. If I'll take 10% of that, this will become 4,000. So this only outstanding shares will be adjusted. Okay. So 4,000. So outstanding shares will become 44 because 40 plus 4, 44. Then here we will not do anything. So these are the weighted average number of shares, 44. So we'll go back to the question. Weighted average number of shares are 44,000. So now we will solve. Just take 229680 divided by 229680 divided by 44,000. So EPS is 5.22. So which is the answer? C is the answer. Okay. Yeah. So guys, now because time is less, otherwise I can do more practice question with you. So now I'm just going to go through the concept of diluted EPS. So just moving to that side. Diluted EPS. So first I told you guys, whenever we have a complex capital structure, so in that scenario, we need basic EPS also. Basic EPS is already done. Now I'm going to tell you diluted EPS calculation. And I told you when complex capital structure is there. If an exam I told you we have a stock option, stock warrant, convertible bond, or convertible preferred stocks, it means we have a complex capital structure. Okay. Whenever we have a potential common stock means say stock options, stock warrant, okay, or warrant. Okay, then we have a convertible bonds, convertible preferred stock. So these are called potential common stock. So whenever we have these, so it is called complex capital structure. So basic EPS we will calculate and we learned. So we also need to show diluted EPS and we always use if converted method. What if these securities are converted to common shares? So what would be the impact on EPS? Or how much EPS will dilute or will reduce? How much EPS will reduce or dilute? That is called diluted EPS. Okay. Now, without wasting any time, so I'm just going to show you calculation. No need unnecessary discussion. So here we go, guys. Please remember. Here we go. I'm just writing a formula first for basic EPS first and see how diluted EPS will be calculated. So guys, diluted EPS, how it is calculated. So diluted. Okay, first this portion, whatever I'll write it here, this is the formula for basic EPS. First I'll write. Okay, what was the formula for basic EPS? So formula was net income minus preferred dividend. Okay, divided by weighted average number of common stock outstanding, right? This was the formula. Now, please remember, when we calculate, this portion is for basic EPS, right? This portion is for basic EPS. But I'm explaining diluted EPS. And with the diluted EPS, so now we have to adjust this way. If you have convertible bonds, first I'm telling you, if you have a convertible bond, so numerator and denominator both of basic EPS, we need to adjust. So please, here we go. In numerator, what will be adjustment? We will add here first. If we have a convertible bond, so we will write it here, interest saved into 1 minus T. Please remember, this interest should be per year. Interest saved per annum into 1 minus T. Because if converted method we are using, okay, because I'm talking about convertible bonds, because if bonds are converted okay, to the common stock. So you would save interest. You don't need to pay interest, right? So that's why we take interest saved per annum into 1 minus T. T stands for tax. So for example, if tax rate is 40%, you will write 1 minus 0.4. Tax is 30%, we'll write 1 minus 0.3. Okay, if tax is 20%, 1 minus 0.2. So this is what is 1 minus T. Interest, you know how to calculate. You need face value of bonds multiplied by interest percentage. So this will give you interest saving into 1 minus T. This is the adjustment in the numerator. And in the denominator, what you will add? You will add here, because we are going to issue common shares, okay, against the convertible bond. So we need to add here in the denominator what? Number of shares, common shares, okay, issued or to be issued against convertible bonds. So this is the adjustment for convertible bonds. Okay. For convertible bonds in the numerator, what we will do? We will add interest saved into 1 minus T, 1 minus T divided by number of shares issued against common convertible bonds. Okay. Number of common shares issued against convertible bonds. That will be adjusted in the denominator. Then if you have a preferred stock also, again, we will adjust numerator and denominator. If you have a convertible preferred stock, so this adjustment for what? Convertible bonds. Now here, whatever adjustment I will do, that is for convertible preferred stock. So please remember, in numerator, what will be adjusted? What will be adjusted? First thing, dividend will be saved. Whatever dividend you were paying to the convertible preferred stock, that dividend will be saved, right? So there you will add a dividend saved, because once this dividend will be saved, so you can give this to the common shareholder, right? That is why it will be added to the numerator. Okay, dividend saved. Please don't do here 1 minus T. Don't do, because dividend is not tax deductible. Okay, just dividend saved per year, per annum. Dividend saved per annum. Okay, against convertible preferred stock, and we will add in the denominator. What we will add? We will add number of common shares issued or to be issued against convertible preferred stock. Number of new common shares. Okay. So numerator and denominator will be adjusted. And please remember, now next, continuing with this formula, if you have a warrant or option, so please, warrant or option, then plus, please, for warrant and option, no adjustment is required in the numerator. Only denominator will be adjusted, because against warrant, you are selling the shares at discounted price. Even against option, you are selling shares at discounted price. Okay, so only number of shares you are issuing. So denominator will increase, not the numerator. So here, so if you have a warrant or option, so this adjustment is for warrant or option. Okay, so we will add a number of shares issued, okay, against warrant or option. Okay, only denominator will be adjusted. So once you will calculate this way, so this is called what? Diluted EPS. Okay, now I'll show you calculation, so you will get the best picture with the calculation. So this is the formula for diluted EPS. It means in diluted EPS, when we calculate, so we need the formula basic EPS, and then we adjust for convertible bonds, convertible preferred stock, or warrant or option, and then once we calculate the EPS, that is called diluted EPS. So here I'll show you small example. So most probably in your exam question, they may ask theoretical question also, but let's have a look if calculations are there. So here we go. This is the data from here till here. We have a data for question, and then I'll solve it how to calculate diluted EPS. Here we go, guys. So we have a green company. So we have a green company's current year basic EPS. This is current year basic EPS is how much? $40. Basic is given, already calculated. And how this $40 is calculated? So income available to common share is 400,000 divided by weighted average number of shares, how much? 10,000. So this is how 400,000 divided by 10,000. $40 is the basic EPS. So we are provided with the basic EPS calculation. And then they are telling you no dividend was declared this year. Okay. And the company's effective tax rate is 30%. Okay. The following potential common stock, PCS, were outstanding during the year. So they are saying $500,000 face amount, 10 years, 6% convertible bond. So this is the face value. This is the rate of interest. This is the maturity period. Bonds are convertible. It means this is the potential common stock. Okay. The bonds were originally issued at par. Okay. And each $5,000 bond, they're saying now, and each $5,000 bond is convertible into 10 of Green's common shares. It means against each 5,000 face value of bond, against each $5,000, you will give 10 shares. Can you tell me, guys, how many number of shares you will give? So we can calculate very quickly number of shares. So total face value is $500,000. If I'll divide with the 5,000, okay, so I'll get number of times we will give 10 shares. Like, because 5,000 is the total face value divided by 5,000, because against each 5,000 you will get, you will give 10 shares. So if I take total face value divided by 5,000, this will give me number of times I have to give 10 shares. Number of times. So number of times how much? So 500,000 divided by 5,000. So number of times are how much? 100 times. 100 times I will give $10, 10 shares. Because he told you against each 5,000 you will get 10 shares. So 100 times you have to give 10 shares. It means total shares you will give how much? 100 times 10. So 1,000 shares will be issued against bonds. Same way you have to calculate interest saved also. This is bond adjustment I'm doing. Interest saved you also need to calculate. This is the number. This is for convertible bonds. Okay. How much interest is saved? Interest, how it is calculated? Face value, which is 500,000, multiplied by rate of interest. What is the rate of interest? See, check here. Rate of interest is 6%. Okay. Multiply by 6%. So this will give you interest saved. Interest saved. Okay. How much? 5,000, 500,000 into 6%. It is going to be 30,000. So this is interest saved per year into 1 minus T. Tax is 30% given in the question. So what final amount is? Okay, final amount is 30,000 into 0.7. So 21,000 is interest saved. Okay, so it means we can work with the basic diluted EPS. How we can work with the diluted EPS? So diluted EPS. First for basic EPS, net income available was how much? I'm reading and solving, guys. It was 400,000 net income available and shares were 10,000 for basic EPS. For basic EPS, 400,000 divided net income available, right? And 10,000 shares. Now see, plus interest saved how much? 21,000 against bonds, and number of shares how much against bonds? 1,000 shares, right? 1,000 shares. So plus 1,000 shares. Then we have to adjust for convertible preferred stock, because next line is for convertible preferred stock. I'm assuming shares outstanding are given, okay? Existing one and new one, just we are adjusting. Now here, next transaction, they're saying 10,000 shares, $20 par value, 10% cumulative convertible preferred stock. Okay, it's also potential common stock. Okay, so the conversion ratio is 5 shares of preferred stock to 2 shares of common stock. So they're saying if you hold 2 shares of common, okay. No, what they're saying, for against each 5 preferred shares, you will get 2 common shares. This is the ratio, 2 for 5. Like you will get 2 common shares, common stock, if you have a 5 preferred stock. This is what is the ratio, right? Okay. Now here we go. First of all, we have to calculate how much dividend can be saved. So dividend can be saved. How you calculate? So we need value first. Dividend saved. So 10% is the dividend. Par value we need. Par value how I'll calculate. So 10,000 is shares. Yeah. $20 is the par value given, right? Per share. So 10 times 20. 10,000 times 20. It is 200,000 par value. Into percentage of dividend, how much? 10%. So dividend saved is 20,000. So this 20,000 I'll add it here. There is a formula. Yeah. Dividend saved is 20,000. So I write it here. And please don't do 1 minus 2, okay? And now we have to calculate number of shares. Number of shares. How it is calculated, he told you. Total preferred shares are how much? Preferred shares are 10,000. And he told you for every 5 preferred shares, 2 common shares you will get. So preferred shares are 10,000. Preferred shares are 10,000. So you will, this is preferred shares divided by 5 preferred shares. So this will give you number of times you will get 2 common shares. Number of times you will get 2 common shares. So first calculate number of times. So 10,000 divided by 5. It is 2,000 number of times. Like 2,000 times you will get 2 shares. So 2,000 times 2 common shares. It means 4,000 common shares will be issued. So 4,000. So we'll calculate basic EPS now. So diluted EPS will be calculated. So now see, numerator is adjusted, denominator is adjusted. Here we go. 400,000 plus 20,000 plus 21,000. So total is 441,000. So what's the denominator? 10,000 plus 5,000, right? 10 plus 5, 15,000. So EPS is 29.4. This is diluted EPS. And what was basic EPS? We can check, is it correct or not? 20.4. Yeah, 29.4. Yes, correct. Okay. Now what was basic EPS? Basic EPS is given in the question. Basic was $40. So it means your basic was $40, right? Basic EPS, this diluted EPS you will compare with the basic. Basic was 40. It means your EPS is diluted by how much? Your earning per share is diluted by, or your EPS will dilute by these potential common stocks if these convertible bonds or convertible preferred stock will convert. Okay, so how much it is diluted? So 40 minus 29.4. So it is diluted by $10.6. It means if those potential common stock will convert, so your EPS may dilute by $10.6. Okay, guys. Thank you so much. I hope so it is clear. See you in the next video.